Hi, my name's Oliver Brown, and after a 2-week hiatus, it's great to be back doing another 2 mugs in coffee. It's the 1st of December, and I'm joined again by Stephen Bannister to talk all things bulls and bears and give us a bit of an update on where we are. Steve, welcome.
Thank you, Ollie. Good to be here, and definitely apologies to our wider audience for not submitting a video the last 2 weeks. We've been subjected, yes, to the bulls and the bears of late, and it's been a really interesting ride. I think what we talked about 2 weeks ago into the Z expiry being squeezed, well, it got squeezed. And what I didn't quite anticipate was that squeeze continuing on into the next week. So we've definitely pushed into, or we pushed over the 12-year high rather, into just over 240 US cents a pound. Lately, though, this week we've thankfully seen a little bit of a relief coming into the end of November, with the market hovering just under 230 cents a pound. So it's been a wild couple of days, that is for sure.
Do we feel, because I know there has been some talk, and I guess we'll go into the bullish versus the bears factors, but do we think there's a possibility it could get to our $3 if it sort of continues on in that trajectory, even though we've dropped away? Do we anticipate it could go there?
I think if we weigh all of the information up, and especially there's two worrying factors right now. The first factor is really the structure of the overall market. And generally that structure will see cheaper prices on the nearby and more expensive prices further out as we book out the different cover months on futures contracts. At the moment, we have an inverted backwardation, if we want to use the technical term, market, where almost the near term is more expensive. What does that tell us? That sort of tells us that people are wanting coffee now, wanting it shipped now, and really potentially building inventories into the holiday period. Who in their right mind is buying coffee at 200 cents or 240 cents a pound? Well, that is also, I think, the question or the elephant in the room, because on an exchange basis, if we look at our commitment of traders report, and we've touched on that in the past, we've seen definitely a large number of contracts being added from probably the more speculative side of the industry. So those that aren't necessarily viewed as a physical trader, but one that is potentially an index fund or a hedge fund or a large investor. And that's really pushed their limits. We've seen them move to a higher week-on-week higher allocation. So, and we've seen not really huge volumes traded on a daily basis through the exchange. So is it a huge risk premium? Is it because people really need coffee? What is happening? And the other point that is known but is still playing out is really the deficit position, because of the future Brazil crop. What we're hearing potentially is that whilst we've continued to have ideal flowering conditions and rain when it's needed, that fruit set is still quite fragile. And people are starting to revise down their future forecasts. We're seeing a range at the moment between 1 and 2 million bags. So I think we'll see further strength to the Brazilian crop numbers with a few people doing surveys in December. But there's definitely chatter around that the numbers that are out there being circulated today are probably on the high-ish side compared to where people's intuition is telling them where it's going to be. And I'm going to keep talking, so bear with me because this is a bit of a large thing to explain. And what happens is we've got a good amount of crop harvested this year. We had a very good season. We've got coffee in the sheds. What does that mean? It means that we've got enough coffee to carry over into 2022 to help buffer that lower production coming through. What people are starting to be a little bit nervous on is the first half of 2023 now, because when not most of that carry coming through from this year is going to be used up. We don't have a surplus, so we're going to have a deficit. So going into the first half of 2023 rather, we're going to have probably a bit of a Brazil squeeze-ish. And I would really encourage people to think almost that far out now on forecasting what could happen. We're not necessarily saying go lock all the levers of price today, but I think it would be important to make sure, especially those that have a large volume requirement or a certified requirement, that you really be thinking about the possibility of how are you going to have supply that far out. And I think those are the two aspects that's really giving price or the risk premium to the market over the last month. We definitely saw probably 30 cents from the beginning of November to the end of November, where we saw it go all the way up to 240. So a 40-cent range in the month has been a big month.
And sort of dialing in on the certified stocks, we're also seeing a drop in volume as well in some of those the warehouses, the access. I think it was we're showing 1.6 million today or in December, and that's a drop away. A significant drop as well. Is that hinting that got more?
I think again, let's clarify 2 points when we talk about certified stocks and certification. They're two different things. So certified stocks are being the stock that is held by the exchanges, either the ICE exchange or the Arabica contract or the Robusta contract. And all of that coffee is either in Europe or in America. What we're seeing because of the complete challenge of moving coffee around the world at the moment is that people are reliant on drawing down coffee from the exchange to get the price they need, especially if they've had long futures. They're willing to cash those futures in and get the physical supply from the exchange. It's always got to be remembered, though, that there is a bit of a risk element to drawing from the exchange, and that is you don't actually get to choose the coffee that is allocated to you. So you may hope that you get Brazil, but you may get Uganda or you may get Honduras as well, and you're not necessarily going to get a choice on how old that lot is either. So there is an uncertain aspect, depending on the roaster and how you will use it, about receiving coffee from the exchange. From our perspective in Australia, no exchange, no opportunity to work like that. However, I think it is a very important factor on what is driving that market. And if we're definitely seeing a lower certified stock number related to stocks held by the exchange, then that definitely prevents the market from really falling because we're having a tighter supply situation.
And of course, adding to that, logistics are getting no better. We're still seeing those challenges, which is sort of adding oil to the fire.
We've definitely seen prices come off in the magnitude of let's say 10 to 20% in ocean freight, but they're still magnitudes of multiples above what we were paying back in 2019 as well. And the first key horizon is really the Lunar New Year, where until then we don't think of anything. Again, referencing better minds than my own, normality is probably closer to 2023 than 2022. And we've got to also reference, I guess, why? Because we've had lower populations coming back because of lockdowns and situations related to COVID. And now we also have a new variant on the scene, unfortunately. And I think that will again continue to slow or meander the pace of getting back to a full capacity situation. So yeah, I think that aspect of plan ahead and plan as far ahead as you can, maybe not to lock the price, but making sure that you know where your coffee is coming from, I think is a very important question to ask as we go into the end of this year and start next year.
Yeah, absolutely. The other issue I want to pick apart a bit, and we've been seeing, well, hearing a little bit about it in Brazil, is the idea of the setting, the flower setting, which is, when the farmers get that crucial rain period after the flowers have come through, and then good rain so that those then develop into full flowers. I understand that that's not necessarily been happening. They're not getting that rain to allow those, as they call them, the spikes, I believe it is, to be set. Is that impacting 2022, 23? Is that impacting 23 onwards?
I mean, it's more so the flowerings that have happened this year are the fruit for next year. And now it's all about ensuring that flowering or that set can mature into a green cherry and then go to maturation and be picked later on. So we've still got a way to go. I always think there's a bit of positives and negatives come out depending on farmers and who you talk to. Overall, though, it's important to reference climate as well. Here in lovely Australia, where we don't have much of a coffee crop, we are going into La Nina. So we're going to have a lot more rain and it's going to be very wet. And we're seeing similar situations in Colombia, where they're also probably in a La Nina position. Interestingly, with Brazil being a slightly geographically lower, the models aren't predicting as much of a drenching in Brazil. The crops that we're seeing are potentially more impacted as soy and wheat in Brazil than coffee. So it's still a waiting game. I think conditions have been good. The Arabica plant in general likes to be stressed. So it will actually result in hopefully more fruit set after the flowering. But it's a wait and see. There's still a number of months to go before we really get to know what's going to happen. And I think because of that uncertainty, we're seeing that potential retracement in the overall crop prediction for 2022. We're down maybe 1, maybe 2 million bags, where we've had an optimum, a great flowering. We've had fairly good conditions moving forward. But again, is that going to be enough? And I think that optimism is maybe coming out a tiny little bit. So yeah. If we look further ahead, though, if we look at the cycle and the weather maps into 2023, we look to really maybe having an on-off cycle again in Brazil, where the 2023 predictions are again, for a very strong, similar to this year, sort of 70 million bag crop. Just remembering that that includes both Arabica and Robusta.
Yeah. And again, I think another one of those big factors that's not helping the whole situation, Ethiopia. We're adding into all the difficulties with Brazil, Colombia. Now Ethiopia is facing or in civil war. We're getting mixed messaging from producers as to whether or not the crop is positive or whether it's not looking so good. And it's very difficult to get any information out from Ethiopia at the moment as to whether or not we should be continuing as usual or not. And I think that's also impacting what the market's thinking. Do you feel Ethiopia on its own is enough of a
driver
to drive it up?
I think on its own, totally, it's a small factor, but there's many different drivers that are happening within the macro economy or the macro position of coffee at the moment. I think what's important is the crop is there in Ethiopia, and now it's the challenge of ensuring that can it be harvested and dried and exported. So it's not so much right now a production problem, it's a logistics, processing, picking, packing problem in a way. And what will that do? Will we see a larger offerings of grade 5 potentially, because everything will just get strip picked, and there's limited, from what we're hearing, that there's a lot limited cash in the market. So exchanging of cherries or buying cherries for the middlemen and the processors have been very difficult, because that exchange is not quite happening as it would regularly. So in times like this, we may see, instead of selective picking, we may see more strip picking and other things. But I think in general, the qualities will be there. And I think we're going to probably have a good indication now that harvest is definitely underway, of what's possible probably by mid to end of this month. We hope for everybody in Addis and greater Ethiopia that the conflict can come to an early resolution as fast as possible. If that happens, it's probably great for the coffee industry, and they can take advantage of these good prices. But if it doesn't, we will see a very fragmented situation of getting coffee out. And we've got to remember that the coffee is picked in one place, processed in another, exported in another. So where you've got coffee traveling across vast distances in an unstable environment, that also can put a risk premium on that coffee as well. So there's many things, and you and I, we're talking to Ethiopia every week at the moment to try and understand these challenges and fairly value them and make sure we can support those amazing producers and partners that we've been working with over the last number of years.
Yeah, absolutely. I think from my perspective, is get in there as soon as possible. Prepare your numbers, be aware of what your usage is going to be, so that we can get things moving. I am like you, hoping that things settle down a bit, because Ethiopia only have one access to a port in Djibouti, and that's directly through the town of Dessie, which is currently being held by the rebel forces. So it's going to be very, very challenging if something doesn't come to a head and we don't have a resolution.
Sure.
So yeah,
definitely. I think just on that, it's probably important for people, and whether they've got it or not, to think about their probably Q1 and Q2 requirements, because as we're looking to get coffee out as fast as possible, that may or may not be achievable. And I think people should just review the coffees or the opportunities of substitutes that are available through Q1, especially if they've got procurement to do in that sort of Ethiopian bracket, let's say.
Yeah, for sure. So I mean there's sort of the major bullish factors. What is, you know, what are the bearish factors? What are things that we might see that will slow things down? What could possibly put a brake on this charge to $3, Steve? I would have thought the coming of Omicron, as it's called. That is the coolest name, by the way. I love that. But I would have thought the coming of Omicron would have spelt the opposite. I thought it would have encouraged prices, you know, theoretically. But of course, if countries go back into lockdown, then consumption will reduce, and that therefore could put a brake on the price.
Yeah, I think the biggest macro thing right now is Omicron, however we pronounce this. So I'm sure I'll get it right in a couple of weeks. Well, this new variant that has emerged, and it's going to be interesting how governments now react to this. We've seen probably some interesting lockdowns and travel bans already in Europe. Unfortunately, Australia has been one of the early recipients of the domestic travel, as we've just opened up in November. And lo and behold, unfortunately, we've had 6 cases of the new variant already. Similarly, it's in Brazil, it's in Japan, so it's already traveled a little bit, which is quite scary, and it's believed to be more contagious than Delta, looking at the earlier modeling. So I don't think governments necessarily want to lock down. I don't think that's part of forward strategy, but it's definitely an option in their sort of COVID combatants toolbox that they could use. That's probably the main driver, is that uncertainty. And if we see a big sort of risk off position, where what is the, I guess, when we touched before, the speculative money doing? If they've already made some profit by pushing the market up in November, will they take that profit off the table and check out for the rest of the year, or will they hold their positions and wait?
Yeah.
We are seeing a little bit of a rebalancing from the index fund point of view, which will probably mean a bit of selling of coffee, because they wait not only on a size but a dollar value. So holding the same amount of contracts as they did last year is now a lot more in dollar terms. So they're reweighing a little bit.
Yeah.
But yeah, I don't think there's too many bearish factors right now.
Yeah.
Or factors that will drive the market lower. I think that the key is really the risk off position and probably the macro inflation talk, where coffee's gone up, everything seems to be going up, and how a business is going to survive. Is that going to be a stagnation point where all costs go up, so then unfortunately consumption lowers? Could that happen? Potentially. Coffee, though, has proven for a very long time to be a constant in people's daily routines. And I think we're also in a great position because people have actually invested into their own equipment at home due to COVID. So people are more inclined to continue to consume coffee just from an at-home perspective than maybe a coffee shop perspective. And that also has two streams. If we're doing roast and ground at home, that's presumably good for consumption because the at-home barista, no offense, I am one myself to those listeners, we're probably putting in 20 plus gram baskets. We're putting in a good healthy dose of coffee into every shot we give ourselves in the morning. But the reciprocal is if people are using pods, where pods you're probably getting 5 to 8 grams per shot. So you're actually using coffee very efficiently. So those two balancing out, I feel the largest side of coffee is still going to be consumed. It's just at what pace per cup. That we really need to consider. And we've also got to think about what is the future of work, because I think the future of work is going to be a bit more of a hybrid situation than we've seen in the past, where we're going to have probably midweek a lot more city volume in those cafes where people are based in the city and going to work. But it seems to be the norm here a little bit where there's flexibility on the Mondays and the Fridays where people work from home. So I think we're going to see this constant evolution of what is the new norm. I did have a quick trip to Melbourne last week. So shout out to all our friends and customers and everything else in Melbourne to enjoy the lovely coffee down there. And that was definitely saying the city environment is picking up as people go back. And I think we'll see a larger pickup come back into February, as long as this new variant can be controlled in some way, shape or form.
So if we think that all of these things are pointing towards a rising market, with advice to those that still need to cover, that still need to buy, where are our where do we feel our levels of support are? And like, when should we be buying if we get the chance, if the market comes down a little bit? Like, where do you feel those levels are, in the C market, and what should our customers be looking to do? And obviously taking taking risk off the table is key.
Sure.
What advice can you give for our listeners?
Yeah, it's definitely not financial advice. I guess my own and internal opinions of where we're modeling. But if we looked at the 240 market, which we started out and the week at, we saw clear support at 233 and 226. We sort of touched on 226 last night, and we're almost sitting there a couple of cents above that on the close of last night's session. So the question right now for us is 226 or 225, 220 going to hold, or are we going to continue to retrace lower? That's the conversation that we're going to be proven tomorrow. I think from a macro supply point of view and a coffee structure point of view, I still remain I think we're going to see prices continue to the upside a little bit. If we look at the bullish channels that I've created on my charting software, then we haven't retraced through the bottom of those channels by any means.
Wow.
And I think that's important. We did probably blow the top off them when we hit 240, but we're now sort of in the channel again. And I think we're going to probably need a retracement of, again, another 20 cents more. And it's difficult. I think people keep resetting the bar. So, oh, I missed this price, right? I'll be 10 cents lower. So I think there's a lot of buying support. It has been in Asia at 230. There's probably more at 220 today as people sort of continue to take the price, because it's the worst case scenario is it's 10, 20, 30 cents higher in the end of the year. I would definitely encourage people just to have open, honest conversations and work out models where, if they've got ability to be flexible on moving the levers of fixing price, do that. And that's really about sitting down and talking to people and understanding how to price, depending on when people need coffee, of course. But yeah, it's always that risk pricing conversation is always something that I'd encourage people to be open and honest about. I think many people continue to be anchored to prices of the past, and the market's going to continue to hurt people if they don't make decisions. Now, those decisions are outside our models and our budgets and everything else, but we have to, in a way, close our eyes to continue to supply our businesses, if that's what we need to do, and look for opportunities into next year, per se, to get that value back.
Yeah, absolutely. Thank you very much for that, Steve. Really appreciate it. And that's about time today for our 2 mug session. So really appreciate the deep dive and looking at some of those, bullish versus bearish factors. Really appreciate having you with me and sharing this with all of our listeners. Thank you so much.
Thanks, Oli. Appreciate it. I'm going to go for a ride on the Ferris wheel now, and I'll see you all shortly.
Thank you,
Bye-bye.
Steve. Thanks, everyone. Bye.